I think we would be in a position to complete the syllabus. So I have shared the screen. Is the screen is visible to all of you?
Yes, sir.
Yes.
Okay. So in unit number three, one important topic of insurance company, we have uh, covered it. The another topic, which is in unit number three, is about the audit of cooperative societies. So let's start with the audit of cooperative societies. So who can become an auditor? The qualification of an auditor in case of audit of a cooperative societies. So apart from the chartered accountant, within the meaning of Chartered Accountant Act 1949, some of the state cooperative acts have permitted a person holding a government diploma in cooperative accounts and accountancy as also a person who has served as an auditor in the cooperative departments of the government to act as an auditor. So, in case of cooperative society, generally it is the chartered accountant who shall be appointed as an auditor of a company. But if the state government of a particular state allows the other persons who is holding a government diploma in cooperative accounts or accountancy, right, or who are working in cooperative departments of the government can also act as an auditor. So here the qualification has little bit extended uh, apart from the chartered accountants. सो कोऑपरेटिव सोसाइटी में हर एक स्टेट गवर्नमेंट ये प्रावधान कर सकती है कि वो दूसरे लोगों को भी ऑडिटर बना सकते हैं सो दे कैन बिकम एन ऑडिटर ऑफ अ कोऑपरेटिव सोसाइटीज अपॉइंटमेंट ऑफ द को ऑडिटर an auditor of a cooperative society is appointed by the registrar of cooperative societies so in all these states those who have a state cooperative act their regional offices in if you take an example of a Vadodara, we are in Narabda Bhavan, there is an registrar office of the cooperative societies. So all the cooperative societies who are registered under the Cooperative Society Act, they register themselves with the registrar of the respective district. So in Vadodara, it is in Narabda Bhavan, and there is a one officer who is called as a registrar of the cooperative societies, and that particular registrar can appoint the auditor of a cooperative societies. The auditor so appointed conducts the audit on behalf of the registrar and submit his report to him and also to the society. So whoever is appointed as an auditor has a responsibility to complete the audit of the cooperative society, prepare a report, and have to submit to the registrar as well as submit a report to the respective cooperative societies where he is an auditor. The audit fees are paid by the society on the basis of statutory scales of fees prescribed by the registrar. So here, how much the audit fee is to be paid is to be determined by the registrar, and the cooperative society to pay the skill as per the provisions in the Cooperative Society Acts and the resolutions passed by the registrar. Books, accounts, and other records of the cooperative societies under Section 47H of the Cooperative Society Act, a state government can frame the rules prescribed in the books of accounts to be kept by the cooperative societies. For example, in Maharashtra, cooperative societies are required to maintain the case book, general ledger, personal ledger, stock register, property register, etc. etc. So whatever is prescribed in a particular act, that the cooperative society will maintain the books of accounts. So generally it is everywhere that is a case book, bank book, right? Even case book includes the bank book, general ledger, then personal ledger means all the individual ledgers of the party to whom the transaction has been carried out. Stock registered, property registered, investment registered, something like that. Then register of members are also very, very important document, which is not mentioned over here, but the register of the members who are the members of the cooperative societies, uh, that is also to be maintained. It is very much clear that the requirement under the state act resembles the provisions made under the Companies Act 2013. So Companies Act 2013 can the whatever the requirements are there, the same are adopted by the State Cooperative Societies Act. The books of accounts required to be maintained in terms of the instruction of the registrar are in respect of the following. So this is all about from the Companies Act 2013. All the sum of money received and expanded by the society. So any money which is either received by the society or which is expensed out by the society, or wherever there is a payment, the record of it should be maintained. So because the word is used, all the sum of money, either received or expanded. All sales and purchase of the goods by the society, all the assets and liability of the society, that is to be required to be maintained. The society is at liberty to maintain and such additional records according to the convenience and which is things fit more useful for our clarity and detailed explanation. So it is how the cooperative society are functioning and what kind of information they required from the books of accounts for various kinds of taking the decisions. So for that purpose, they can go beyond maintaining the records, which is not mentioned the above, right? The example of such additional records are property and investment registered, fixed deposit registered, surety registered, because generally on behalf of their members, the societies are providing the guarantees to the third parties, which is to be treated as surety register. So that should be mentioned. That should be, the record should be maintained of it in the form of one register, that is known as a surety register. Daily cash sales summary registered, register of collection from debtors if the credit sales are allowed by the bylaws of the cooperative societies, loan disbursement and recovery registered in case of credit societies. So these are the documents. Remember that as in case of trust, the trust deed is an important document. In case of partnership firm, the partnership deed plays an important role. In case of companies, it is the memorandum of association and articles of associations plays an important role. Same way here, in case of cooperative societies, the bylaws are there. All these documents, whether it is a trust deed or whether it is a partnership deed, whether it is a memorandum of association, articles of association, they actually and the bylaws in case of cooperative society, everything actually talks about the same, but the terminology and wordings are used different in different form of organizations. So whenever in exam, it's the question is asked about the cooperative societies, you have to use the word, better word, you to use these the bylaws, because that is what is important. Here you cannot write the articles of association, right? Otherwise it is not appropriate. I am not saying it is wrong, but it is not appropriate, and the conceptual clarity of the students cannot be justified in that circumstances, right? So that's what you have to write. So you should be careful when you write in examinations. I have distributed the answer book yesterday. So many students have, the complaints that I have not allotted the appropriate marks. But you need to understand it is a standard. So whatever is mentioned under the standards, you have to write it. You and me does not have any authority to change it. So if the question is about the standards on auditing, whatever is mentioned under the standards on auditing, you have to write. You can deviate by by you choosing the words, but you have to make the content which is of the standards. So you have to write about the current standards. You can use your own wordings, but you cannot change the matter of the standards. So some of the students have write by on themselves without understanding the content of the standards, and that's the reason you are not able to get the appropriate marks. And however, here you can write by yourself something as far as the unit number 3 and 4 is concerned. So that's what I would like to discuss with this, so that you can take care of while you are appearing for the final examinations, right? As far as the unit number 1 and 2 concerned, when you write in about the standards, make it sure that you write what is mentioned under the standards. Wherever the here, you can just little bit here and there you can write it. Okay, fine. So restrictions on shareholdings. Right. Section 5 of the Cooperative Societies Act 1912 provides that in case of the societies where the liability of a member of a society is limited, no member of the society other than the registered society can hold such portion of share capital of a society as would exceed the maximum of 20% of the total number of shares or of the value of shareholding to rupees 1000. So nowadays not 1000, but it is a 20%, right? So either of it. So किसी एक मेंबर के पास 20% से ज्यादा शेयर होना चाहिए नहीं, अदरवाइज दैट पर्सन हैव अ बेटर अपॉर्चुनिटी टू टेक ऑल द डिसीजन अबाउट द कोऑपरेटिव सोसाइटी, एंड देन इन दैट सर्कमस्टेंसेस इट कुड बी पॉसिबल that the decisions which is taken in the taken by the cooperative societies, the governing bodies, may not be in the interest of society or the members of the society, but it could be utilized for the benefit of the member who is holding more than the 20% number of shares. And that's the reason these are the restriction which is imposed under the Cooperative Societies Act under subsection 5. Is it clear, Bacho?
Yes, sir.
Okay. The auditor of cooperative society will be concerned with this provision so as to watch any breach relating to the holding of shares. So obviously the auditor has to take care of that. Now none of the members are holding such kind of shares. Restrictions on loans. A corporate society shall not make a loan to any persons other than the members, right? Because their business is not of lending. However, the cooperative societies can have a business of banking. कोऑपरेटिव सोसाइटी को बैंकिंग का बिजनेस हो सकता है, ऐसा नहीं कि नहीं हो सकता है, right? But it should be provided by the loan. But if it is not a banking cooperative societies, then obviously they cannot make the loan to the another persons other than their members. With partial sanctions of the registrar, a registered society may make a loan to the another registered society. Registered society को वो loan may सकते हैं, but in that circumstances it should be duly sanctioned by the registrar of the cooperative societies. State government may further put such restriction as it thinks fit on loaning power of the society to its member or to other societies in the interest of the society concerned and its member. So obviously state government के पास power है, वो कर सकते हैं. However, there is a Cooperative Societies Act 1912 prescribes that if the cooperative societies wants to make loan to the other than the members, then it is subject to certain limitation and subject to the state provisions. Same way. Yeah, so that is liberty is given under the Cooperative Society Acts 1912. But the auditor has to understand the Cooperative Society Acts of the particular state where the cooperative society is registered. So there should be a compliance of both State Cooperative Society Acts as well as the Cooperative Societies Act 1912, both. Restriction on borrowing. A registered society may accept the loans and deposits from its member and other subject to the restrictions and the limits of the bylaws of the societies. So bylaws means bylaws when it is submitted by the submitted by the society to the registrar at the time of registration of the cooperative societies. So it is in mentioned into that. The auditor will have to examine the bylaws in this regards. Right? So as per section 30, it is a duty of an auditor that the auditor has to study the bylaws and whatever the deposit and loan is accepted by the cooperatives, societies, it should be as per the bylaws which is duly sanctioned by the registrar of the society. Then investment of funds. So according to the section 32 of the Central Act here means the Cooperative Societies Act 1912. The mode of investment of fund of a cooperative society may be stated as follow. A society may invest its fund in any one or more of the following. One, in central or state cooperative banks, where they can put a fixed deposit. In any of the securities specified in section 20 of the Indian Trust Act 1882. There are huge list, government securities, government bonds, treasury bonds, something like that, which are secured, generally, which is subject to very negligible amount of volatility. So that is what is mentioned under section 20 of the Indian Trust Act. in the shares, security or bonds or debentures of any other cooperative society with a limited liability. In any cooperative bank other than the central and state cooperative bank as approved by the registrar on a specified terms and conditions. In any other money permitted by the central or state governments. So that is what is subject to the review of the investment funds. Then appropriation of profit. Section 33 of the Cooperative Societies Act 1912 states that 25% of the profit should be transferred to the reserve fund before distribution as dividend or bonus to the members. So wherever the cooperative society are making the profits, out of that profit, they have to keep 25% as a reserve fund, which can be utilized for the future purpose. So before they declare any dividend and bonus, this is what is the requirement. However, there is some relaxation in this 25% is, however, having regard to the financial position of the society, the registrar may reduce the percentage of transfer, but in any case, not less than 10%. So registrar के पास वो power है कि if the financial position of the society is very sound, and the financial statement of the earlier which is submitted to the registrar, and registrar is of the opinion that the financial position of the society is very good, so there is no need to transfer 25%. Even they can transfer 10%, that is more than sufficient. So the registrar may allow from 25% to 10%. So that what is important, right? Contributions to charitable purposes. Now, before I start with this charitable, let's understand that what is the role of an auditor. So as far as after the appointment of an auditor is concerned, the provision relating to the books of accounts, other records of the cooperative society is concerned, whether the cooperative societies have maintained a sufficient records, same way restriction on shareholding, whether the cooperative societies have complied with the restriction of the shareholdings, restriction on loans, restriction on borrowings and investment of fund, whether and appropriation of profit. So whether the cooperative society has complied with all the requirements of Cooperative Societies Act 1912 as well as the State Cooperative Acts, as well as the directions and sanctions or limitations, anything which is prescribed by the registrar of a concerned society. So these three things the auditor has to take into consideration. And if there is any non-compliances of any of these three, auditor has to inform to the society that these are the non-compliances, and you have to take the corrective steps. Means you have to give the directions to the governing body of the cooperative society to take the appropriate steps. So suppose, let's take a simple example. They have transferred only 5%. So as an auditor, it is your responsibility to inform that you cannot transfer up to 5%. You have to minimum at least 10% if the registrar has sanctioned, or otherwise you have to transfer the 25%. And accordingly, the governing body has to transfer it. And if they don't transfer, or if they don't comply any of the non-compliances, which is informed by the auditor, then it is the responsibility of the auditor to mention in the audit report. And that audit report will be submitted to the registrar. So the registrar will take the appropriate steps or actions against that particular cooperative. So that is what is the responsibility. Obviously, auditor has to obtain the sufficient appropriate audit evidence, right? And there should be an effective communications of any of the non-compliances by the auditor to the governing body of the cooperative societies. That's in that way you need to understand. Contribution to the charitable purposes. Section 34 states that a registered society may, with the sanction of the registrar, contribute an amount not exceeding 10% of the net profit remaining after the compulsory transfer to the reserves fund. That this 10% may be, if it is sanctioned by the registrar, right? Otherwise, it should be 25% of the net profit remaining after the compulsory transfer to the reserve fund for any charitable purpose. Obviously, the cooperative society is for the welfare of the common cause for which the cooperative society is constituted and for the common benefits of the members of the cooperative societies. So the other cooperative societies are doing the same job. So Section 34 allows the registered cooperative societies to contribute net profit for the charitable purposes. Investment of reserve fund outside the business or utilization as a working capital. Some of the state acts, not all, but some of the state act provides that the society may use the reserve fund. So obviously, when the cooperative society has a sufficient fund, they would transfer 25% or 10%, as the case may be, to the reserve funds. And when there is a need of using that reserve fund, they may utilize the fund in the business of the society as a working capital, subject to the rules made in this behalf. So there should be a clear rules and regulation which is mentioned under the bylaws, and it should be duly communicated to the registrar of the cooperative society, because the registrar of the cooperative society is the regulatory body. Any investment as per the provisions of the act and may be used for some public purposes, like to promote the object of the society. So whatever the object of the society, you can utilize for that. The auditor should ensure the strict compliance is kindly underlined in the auditor should strictly ensure the strict compliance with the state act rules in these regards, as well as the directions issued by the registrar. Contribution to the education fund. This is simple because education is a very important aspect. So the corporate society can contribute to the education. Some of the state acts provide that every society shall contribute annually towards the education fund of the state federal society at an appropriate rate prescribed. Contribution to education fund is a charge on the profit and not an appropriation. So it should be recorded as an expense. Charge on profit means it is an expense. So first that expense should be charged and then the profit is determined. And it is not an appropriation, something like dividend, distribution of dividend or transfer to reserve. So it is not an appropriation, but it is an expense. All of you know that the central government under the direct taxes, they levy the health and education cess, so 4%. So that health and education cess is utilized for the purpose of wealth of the people of this country and the education of this the people of this country. So education और वो जो 4% लिया जाता है टैक्स के ऊपर, उसका एक्सक्लूसिवली दैट इज अ हेल्थ एंड एजुकेशन से, सो उसके लिए ही वो यूटिलाइज होता है. यहाँ पे भी कोऑपरेट तो कहीं स्टेट गवर्नमेंट को ऐसा लगता है कि दे डू नॉट हैव द सफिशिएंट फंड टू टू to finance or to provide the sufficient financial supports for the educational activities into their states. They may impose an education and a contribution to impose and contribution to education fund in case of the cooperative societies. So ऐसा वो कर सकते हैं. Fine. So now it is all about the partial audit rules and partial audit procedures. You can say the audit procedures of a cooperative audit and a cooperative society's audit. So what are the partial procedure which the auditor adopt at the time of doing an audit, right? So that is examination of overdue debt. So अगर बहुत सारा पैसा ऐसा है जो बहुत टाइम से एडवांस कर दे के रखा है लेकिन it is not receivable, then so here it is in short form, something is written, so which can be useful for all of you to remember all this. So आप इसके ऊपर भी ध्यान दें. I'm not going to read this, I'm going to read all this, right? So this 1, 2, 3, 4 and 5 is in short, it is written over here. So for revision purpose you can read it, but first you read this thoroughly, then you can go through this. Okay. First, overdue debt for a period from 6 months to 5 years and more than 5 years will have to be classified and shall have to be reported by the auditor. So if at the time of performance of an audit, auditor finds that there are debt which is outstanding for more than 6 months, and so less than 6 months, actually there are 3 categories: less than 6 months, 6 months to 5 years, and more than 5 years, have to report and classify appropriately. A further analysis of this overdue debts from the viewpoint of chances of recovery will have to be made, and they will have to be classified as good or bad. So here the auditor has to communicate with the governing body of the cooperative societies, those in charge of managing the cooperative societies, that whatever the overdue debt are there, whether it is recoverable, what are the chances of recovery, what are the steps they have taken, and based on that, it should be classified as good or bad. The auditor will have to ascertain whether the proper provision for the doubtful debt is made and whether the same is satisfactory. If some of the overdue debt is unrecoverable, there should be sufficient amount of provisioning for it, or which is likely to be unrecoverable, then the appropriate amount should be recorded as a provision and it should be satisfactory. The percentage of overdue debt to the working capital and the loan advance will have to be compared with the last year so as to see whether the trend is increasing or decreasing. So in the last year's audit, there are overdues are there, which is, there is a sufficient steps has been taken or not, or whether it will be fruitful in the current year or not. If it is not, so you have to either you have to increase the provisioning for the amount which is likely to become an unrecoverable, or if it is going to realized, then you can reduce the provisioning. If you have made it, if you do not have made it, you have to make a lower amount of provisioning. Examining whether the due and the proper actions for the recovery are taken, then the position regarding the cases in cooperative courts, district courts, etc., and the results thereof. So, if there is a litigation is going on any floor of the court, either at cooperative courts or a district court or high court or wherever it is, so that what is the status of that particular case, that should be taken into consideration. So this is overdue of debt, now overdue of interest. The overdue interest should be excluded from the interest outstanding and accrued due while calculating the profit. All of you know that if the cooperative society have given an advances, so obviously it is on interest, and that interest income is to be treated, and interest is should be treated as an income of the cooperative society. So obviously it is credited to the profit or loss account. But when that uh, overdue interest is not going to be realized, uh, or it is outstanding for a long period of time, and the, the overdue debt is itself is questionable. In that circumstances, the overdue interest should be excluded to be treated as income of the cooperative society. Certifications of the bad debts. Bad debts and irrecoverable losses before being write-off against the bad debts fund, reserve fund, etc., should be certified as bad debt and unrecoverable losses by the auditor where the law so required. Actually, it is not certified by the auditors, but in some of the state law prescribes that auditor has to certify, okay, it is irrecoverable, means the auditor has to examine the governing members of the cooperative society has taken an appropriate step for the recovery of the debt or the loans which is advanced by the cooperative societies, and now they have taken insufficient actions against them. They have make a they have launched a case against them, and now it becomes irrecoverable because of the document evidence he has to certify it. So if the law is required, they have to certify it. Otherwise, the auditor does not have to certify it, but auditor has to take a management representation letter from the governing body that what is the status, and if it is not recoverable and the management is of the opinion to write off as a bad debt, he has to ensure that it is reasonable to write off as a bad debt. Where no such requirement exists as it is, the managing committee of the society must authorize the write-off. So in that circumstances, the managing committee or the governing body of the cooperative society will take the appropriate decision. An auditor has to judge that decisions taken by the governing body of the cooperative society is appropriate. Then valuation of assets and liability. Regarding the valuation of assets, there is no specific provisions or instruction under the Cooperative Societies Act and rules. And as such, due regard shall be had to the general principles of accounting and auditing conventions and standards adopted. So generally in accounting standards और auditing principles के हिसाब से जिस तरीके से valuations को है ना एग्जामिन किया जाता है उसी हिसाब से करना है, because there is no specific provisions contained under the Cooperative Societies Act. The auditor will have to ascertain existence, ownership, valuation of assets. The non-current assets should be valued at cost or less adequate provisioning for depreciation. अगर आप लिखना चाहते हैं तो इसके साथ एक भी चीज लिख लो, including the amortizations and impairment of loss. So that is also to be provided in cooperative societies, but none of the reference book will mention that. But now all of you know that as far as the non-current assets are concerned, you have to provide for, if it is tangible assets, depreciation, and intangible assets, amortization, and as well as the impairment of an asset for the better presentation of the financial statements. So you write that the non-current assets should be valued at cost less adequate provisioning for depreciation and impairment, if any. The incremental expenses incurred in the acquisitions and installation expenses of the assets should be properly capitalized. It should be properly capitalized. The current assets be valued at cost or market price. Actually, market price is rarely used, so it is cost or realizable value, whichever is lower. Right? So that is to be taken into consideration. Regarding the liabilities, the auditor should see that all non-liabilities are brought into the accounts. Means there is none of the liability which is omitted from the books of accounts. So that is very, very important. And the contingent liability are stated by way of footnote with appropriate disclosure. You can add over here with appropriate disclosure. Means whatever the information regarding the contingent liability which is required to be furnished for the better understanding of the financial statements and providing an adequate information to the registrar, it should be mentioned by way of notes. Adherence to the cooperative principles. The auditor will have to ascertain in general how far the objects for which the cooperative organization is set up have been achieved in terms of its working capital. The assessment is not necessarily in terms of profit, but in terms of extending the benefits to the member who have formed the society. This is absolutely very, very important as far as the adherence to the cooperative principles are concerned. This second topic is very, very important. If it is asked in examinations, you have to write this. Right? The assessment is not necessarily in terms of profit, but in terms of extending the benefits to the members who have formed the societies. While auditing the expense, the auditor should see that they are economically incurred and there is no wastage of funds. So proprietary audit, which is to be treated as proprietary audit. Proprietary audit means whenever any expense is incurred by the cooperative societies, it should be ensured that the maximum benefits and optimum benefits is derived from that particular expense, and there is no undue advantage is taken by any of the persons other than the societies and the members of their societies. So proprietary audit means it is logically and sensibly spent, right? That is what is to be taken into consideration. The principle of proprietary audit, that is what is mentioned in the next. The principles of proprietary audit should be followed for the purpose. So proprietary audit, all of you, I hope that all of you should know that. But suppose if I give you, if you earned by yourself 100 rupees and then you spend the 100 rupees, and if someone gives you 100 rupees and you spend, both should be in the same fashion. If you have your own money of 100 rupees and the way you spend while considering everything, because by putting a lot of hard work in your life, you have earned that 100 rupees. So you are very sensible and careful while spending that money. Same way, but if someone gives you as a gift 100 rupees and you spend without taking much of the care where you are spending, then it is not a proprietary audit. So in cooperative society, the members will contribute to the cooperative society. So the people who are in the governing body of the cooperative society, actually they are not spending their own money, but it is the money which is provided by the members. So they have to follow that. It is not the members' money, but if it is their own money and which they have earned. So how they will spend the same in the same rational manner, they have to spend the fund. So that is not as a proper right audit. Observation of the provisions of the Act and the rules. The auditor of the cooperative society is required to point out the infringement with the provisions of the cooperative societies and rules and bylaws. Infringement means there is a non-compliance or there is intentional non-compliances. That is known as an infringement. The financial implication of such infringement should be properly assessed by the auditor and they should be reported. So it should be adequately reported. Some of the state acts contain restriction on the payment of dividends, which should be noted by the auditor. So if any of the state cooperative societies act which does not allow that particular state's cooperative society to distribute the dividend, so it should be adequately, not only these restrictions regarding the dividend, but any kind of restriction which is imposed by the state government, it should be duly complied with. Observation के अंदर बहुत कुछ आ सकता है, जैसे कि हमने पढ़ा है ऊपर education fund, अगर if some of the cooperative society is of the opinion that in their state, whoever is registered as a cooperative have to contribute to the education fund, it should be duly complied with, right? And so that what is the auditor has to see. So in observation and provisionings of the Act and rules, including the directions of the state act. Verifications of the members' registers and examinations of their passbooks. This is very, very important. Examination of the entries in the members' passbook regarding the loans given and its repayment. So if any of the members have taken a loan from the cooperative society, so there should be an adequate entry into that, which is appropriately recorded in that passbook. Confirmation and the confirmation of the loan balance is very much important in the cooperative organization to ensure that the entries in the books of accounts are free from manipulations. So any advances is given every year, one certificate should be obtained from the members who has taken a loan from the cooperative society. These are the outstanding amount with the accrued interest, whatever it would be. So that certificate should be taken. So it will give the auditor and the authenticity that the loan given to the members is not bad and there is no bad debt provision is required. Special order to the registrar. During the course of the audit, if the auditor noticed that there are some serious irregularities in the working of the society, auditor may report these special matters to the registrar. The registrar, on receipt of such special report, may take necessary actions against the society. Circumstances in which a partial report is required, right? Personal profiteering by the members of the managing committee in the transactions of the society which are detrimental to the interest of the society. So अगर जो governing body में है वो अपने फायदे के लिए अगर fund को use कर रहा है, then obviously it is a responsibility of the auditor to report to the registrar. Detection of fraud relating to the expense, purchase, property and stores of the society. Mismanagement, decisions of the management against the cooperative principles, and they are not utilizing the resources of the society in the interest of the society or the members, but other than the interest of the society and the members. Then it is to be treated as mismanagement. In case of urban cooperative banks, disproportionate advances to vested interest group, such as relatives of management, and deliberate negligence about the recovery thereof. The cases of reckless advancing, where the management is negligent about taking the adequate security and proper safeguards for judging the creditworthiness of the party. So those who are in cooperative societies, all the members of the cooperative society will contribute towards the object of the society. But the people who are in, in the governing body, they utilize their fund to giving the advances to their relatives, right? They don't take any appropriate steps for the recovery of them, and there is no prescribed rules for all the people who wants to take the advance from the society. So this is all to be treated. So if any of this identified, or any, this is a simple list. So any of the serious irregularity which is comes to the notice of the auditor has to immediately report it to the registrar. Audit classification of society. After the judgment of
सर
an, yes, any
फ्रॉड एंड
question?
एरर होगा वो भी हम स्पेशल रिपोर्ट में इंक्लूड करेंगे कुछ
Okay,
मिस
good questions.
एप्रोप्रिएशन हो रहा है
Yes, very good questions. If generally the fraud is an intentional, so that fraud comes into the category because it is with the malified intention. So whether that particular fraud should be treated as serious irregularities or not, and whether it will fall into any of the detection of fraud, will fall into this category, you have to understand the magnitude of fraud. If um, the fraud, the magnitude of particular fraud it is damaging to the entire object of the society, and it affects majority of the members of the society, and it is not appropriate as per the Cooperative Society Acts, and either of the central or state or any direction which is issued by the registrar, then obviously it will fall into the category of irregularities, and the page shall report to the registrar. But there is a very negligible amount of fraud. It is obviously it is intentional. So but it is not affecting the entire object of the society, or it is not affecting the majority of the member. Only of a very lower effect is that, then in that circumstances there is no need to report to the registrar. You can include into the audit report. Obviously when you include into the audit report, it will goes to the registrar, so the registrar will be aware of it. But if it is serious, you have to make a separate report, means you have to prepare a partial report. Is it clear?
यस सर
Okay. Audit classification of the society. After the judgment of an overall performance of the society, auditor has to award a class to the society. This judgment is to be based on the criteria specified by the registrar. So the award will be given whether the cooperative society is providing better services to their members, and they are fulfill their objects or not. Based on that, it may be noted here that if the management of the society is not satisfied about the award of the uh, audit class, it can make an appeal to the registrar, and the registrar may direct to review the audit classification. The auditor should be very careful while making the decisions about the class of the society. So there are certain criteria. Based on that criteria, you have to classify the society into either A category, B category, or C category. So that based on that criteria, they have to classify. Discussion of the draft audit report with the managing committee, obviously. So whenever the auditor finalizes the audit report of the cooperative society, they have to give the sufficient opportunity to the governing body or the managing governing members of the cooperative society, right? So on conclusion of the audit, the auditor should ask the secretary of the society to convey a meeting of the managing committee to discuss the draft audit report. The audit report should never be finalized without the discussion with the managing committee. So it is under the Cooperative Societies Act 1990, 1912 that it is mandatory on the part of the auditor to discuss whatever the findings and conclusions he has reached at the end of the audit. He has to communicate accordingly whatever the feedback or whatever the suggestion or information received from the managing committee. If he has to review it, analyze it, and take the appropriate decision, and then he has to finalize the report. But without discussing the draft report with the managing committee, they cannot issue the final audit report. Is it clear, dear students? So this is all about the cooperative societies.
यस
right? So the same, if you look at to this, if you go a little bit earlier, so this is the same here, the audit of cooperative society, here it is given, right? So uh, audit of cooperative society, again, it is the repetitive in nature, but this is a simple in simple understanding, right? But this is more appropriate, the cooperative society. So it is repetitive. So I giving you in homework to read this. I think the, from page number 515 and 16. Is it clear? Because it is repetitive in nature. Is it clear?
Yes, sir.
Okay, fine. Now we need to learn the audit of the charitable trust, right? So the two topics are pending: the audit of banks and audit of charitable trust. I think it is 9:20, 9:18 actually. So 12 minutes to go. Uh, we would be able to cover the corporate and audit of charitable trust. So let's start with the audit of charitable trust. A charitable trust is not a profit organizer. Obviously, the object of the trust is to carry out the charitable activity. Charitable activity means which is for the welfare of a particular people or a particular object. So either the group of people will come together and form a trust, either to the provide to the education to the underprivileged students or the children who are not parents who are not able to afford the provide the education to their children. So their object is to make a charity in case of in the field of education. Same way for health. So some of the trust is constituted for providing the health facilities to the people who are suffering for a particular disease, those who do not afford to to take a treatment of that particular disease. Same way for agricultural area, for backward areas. But that is so that object is charitable in nature. So for that they can form a charitable trust. Right? Charitable trust is not for the profit organizer. The object is never ever be to make a profit, but to achieve the particular objective. It essentially looks after the interest of orphan, destitute, physically challenged and helpless people. So generally ये होता है, orphan means जो अनाथ है वो, right? Destitute, physically challenged or helpless people. So generally for the welfare of all this, the trust is created. So the achievement of that object is very, very important and not the making of the profit. So utilization of fund for achieving all these object should be taken into consideration while doing an audit of a charitable trust. It's also engaged in other benevolent activities. So बहुत सारी और भी अच्छी अच्छी एक्टिविटी के लिए भी ट्रस्ट क्रिएट होता है. Since it looks after needy people, the income tax authority exempts the income of charitable trust subject to fulfillment of certain conditions. So those who constitute a charitable trust, those who are accepting the donations or contributions from the people at large for achievement of their objectives. So while accepting donation or contribution from the public at large will be treated as income of the trust. But if that particular trust wants to get exemption from that income, then they have to register with the income tax authority. That is section 12AB nowadays. So if it is of the Income Tax Act 1961, so if that conditions are satisfied, their income can also gets exempt, because all these charitable trust whose objects are to provide the for, to provide the benefits to the deprived sections of the societies. That is also the objectives of the government. So the government is indirectly achieving their objective by providing the relief in the form of taxes to the charitable trust. The accounts are to be audited by the chartered accountant, and the audit report must be prepared in the form as laid down by the income tax rules. So there is a 10B, form number 10B is the the audit rule under the Income Tax Act. Under the Charitable Trust Act, there is also an audit report. Auditor's duty with respect to the charitable trust are elaborated in the following section. So the general, it's a simple, that's the general consideration is the legal status. The trust should check whether the trust, he means actually the auditor, right? The auditor should check whether the trust is a public trust or a private one. Trust deed, most important document with the auditor has to examine. The auditor should examine the trust deed and other documents of the charitable trust to familiarize himself or herself with the rules and regulation of the trust in questions and the purpose for which it has been formed, as also about the rights and duties of the trustees. So who are trustees, what are the objects, and what the activity are carried out by the trust. Minutes of the meeting, very, very important. Whenever the trustees have taken any decisions, there is a meeting of the trustees, and whatever is discussed into that particular meeting will be noting down in a particular written document, which is to be treated as minutes of the meeting. So that should be examined. The auditor should examine the minutes of the meeting of the trustees to know the resolution affecting the accounts as well as the general administration of the trust. Internal control system in operations, the auditor should examine the adequacy of the internal control system in operations and check that the accounts are drawn up in accordance with the rules framed by the trust, and see that no trustee has enjoyed any undue benefits directly or indirectly from the trust. So that's underlined it. It's very important. So the trustees actually are are the decision making authority under the trust. They have to take all the decision and they have to utilize the resources, including money, of the trust for the object of the trust. But they should not utilize the fund of the trust or the resources of the trust for their own benefits, or they cannot take the undue advantage of it. Receipt, इनकम फ्रॉम प्रॉपर्टी, जनरली जो भी ट्रस्ट होता है, सो उनकी ये सारी इनकम होती है, इनकम फ्रॉम प्रॉपर्टी, उनके पास जो प्रॉपर्टी होती है, जनरली द पीपल हु हैव कंट्रीब्यूटेड द donations or any contributions, they will be put it into the fixed deposit and the interest earned from that. Then interest from investment, donation and subscriptions, which is also sometimes known as a contributions, and legacy, right? So this is the income. So the main source of income of a charitable trust is the trust property. So they can give the property in rent to someone and they earn the rent income. They put into the fixed deposit, then the income from investment, it should be treated as, right? The auditor should verify the income from such property like rental income and study the agreement made with the tenants. Donation and subscription, this is the main income actually. Donation and subscription or contribution. The auditor should vouch the receipts from the donations and subscriptions or contribution as shown in the cash book with the counterfoil of the receipt book. The receipt should be printed with the name of the trust and the number consequently or serially numbered, and it is pre-printed. So write that it is pre-printed with the numbers. He should obtain a list or register of subscribers and the donors and should reconcile the amount receivable with the total amount shown in the account. So that's also to be reconciled. Okay, who are the donors? So the total under the donors ledger and the receipts should be tallied. Income from investment. He should examine the investment register to know the income from investment. So if the trust has invested in fixed deposits or in debentures and something, and in government securities, so whether the adequate income is realized from it or not. Legacy. He should vouch the receipts from the legacies with the legacy registered corresponding with the solicitors. So that is also to be taken into consideration. Then payments, obviously. So payments hai, to that should be a authorization, utilization of donation receipts, investment purchase, and proper distinction between the capital and revenue expenditure. So that is to be taken into consideration by the auditor while the performance of an audit of the charitable trust. So he should verify the payments with the minutes book of the trustee and see that such payments have been duly authorized by the trustees. So there should be an adequate documentation which highlights or which reflects that there is a adequate authorization by the trustees for carrying out a particular payment. utilization of donation received. So generally, whatever the donation is received, it is utilized for the achievement of the objective of the trust. So the donation received for the specific purpose should be properly utilized. So if there is a particular donation with a directions to be utilized, suppose a trust wants to trust in a particular education fund, and they are receiving the donation in different forms, like for construction of an education building, and for purchase of projectors, for purchase of blackboards. So they have categorized the donation for different activities. And a particular donor is giving, suppose I am giving you the donation to the education trust for acquisition of a blackboard, which is placed in the classrooms of the uh, buildings. So it should be utilized only for that purpose, that the auditor has to take into consideration. Investment purchase, he should verify the investment purchase with the broad notes. So if that particular if there is a fixed deposit investment, whatever the extra funds which is lying with the trust, if they have invested into the, and they will make a fixed deposit of it, so there is a fixed deposit registered should be there. If they have brought a government security, there is a receipt book there should be a particular instrument which will satisfy that the investment has been purchased. So that's the auditor has to verify. Proper distinction between the capital and revenue expenditure. Distinction between capital and revenue expenditure has to be checked. So any expense which is revenue in nature, it should be charged to the expenditure account. Generally, in case of trust, profit or loss account cannot be prepared. It is only the income and expenditure account is prepared, because here the objective is not to make the profit. So it should be charged. Revenue expenditure should be charged to the income and expenditure account, and capital expenditure should be capitalized. Assets and liabilities. Verification of assets held by the trust. The auditor should see that the property held under the trust has been shown in the balance sheet and adequate depreciation has been provided on the property, which is appropriate. And it should be physically verified. And the trustees have taken an appropriate steps to safeguard of the assets of the trust. And there is they have physically verified on a time-to-time basis, that the auditor has to see. Verification of assets also includes that to see that it is actually in existence, ownerships, and the documentary evidence which prescribes that the property is held by the trust. Cash in hand and at bank. He should verify the cash in hand and at the bank with the available documentary evidence. So whatever the cash books are there, what are the daily cash registers are maintained, it should be duly verified, and there should be a supervised physical verification of cash and bank. And certificate from the bank should be taken. Bank reconciliation statement should be obtained to ensure that the bank book is reflecting an appropriate amount. Verification of investment is very, very important. Verification of investment held has to be done physically, and in case the investment have been launched with the bank, whether as a security against the loan or in safe custody, he should accord the confirmation from the bank by obtaining a certificate. तो अगर इन्वेस्टमेंट के ऊपर कोई लोन ली गई है और बैंक के साथ वो हाइपोथेकेट कर गया है और ओरिजिनल डॉक्यूमेंट इज लाइंग विद द बैंक, a confirmation certificate should be obtained from the bank that it is in the custody of the bank and it is in the name of the trust. Finally, the auditor should prepare and submit his report to in the prescribed form. तो ऑडिटर को अपना रिपोर्ट तैयार करना है. इन इनकम टैक्स में भी करना है if it is registered under the income tax to claim the exemption of income, or in the trust act, Indian trust act. तो दोनों रिपोर्ट तैयार करना है और दोनों रिस्पेक्टिव अथॉरिटी को सबमिट करना है. So this is a preliminary understanding of the audit of the charitable trust. अभी और भी बाकी है जो हम पढ़ेंगे. Is it clear, dear students?
Yes.
So 9:31 is there. So I am closing the today's class. Tomorrow again we are going to meet at 9:30. Sorry, 8:30 to 9:30. So we are going to meet tomorrow as well, and we will start with the right from the beginning of the unit number 3. Is it clear, dear students?
Yes, sir.